So this is what I'm looking at. I'm looking at this bearish fair value gap here. So in the long run from this time frame, so price is going to draw higher to all this, and we see we have a lot of buy side liquidity resting here. Yeah, they really do not look equal because this price here has offsetted that high, like this equal high right here. So it's really not equal like that.
Okay.
Right, so we can go to the 1 hour time frame to look at what really happened. So literally, our job here is to really scale through time frames to see where do we have inefficiencies and where do we have buy stops and sell stops in form of buy side liquidity and sell side liquidity. Right now, if you check this time frame, in our time window, we did not have it that it traded to this 1 hour fair value gap. Our time window was just right here. So we just scaled through the 2 hours time frame. This way we had this bullish fair value gap, right? And we saw that the candlestick traded below that bullish fair value gap. And we've had a whole lot of cool expansion to the upside. So at least we should expect some form of retracement. So this bullish fair value gap disrespecting here, and we have this close to the downside, can build up a narrative and a framework for price continuing to the downside, supporting lower prices. But then because of those quick expansion to the upside, we need to consider, did it form any inefficiency? So we have bullish fair value gaps here. So if it is going to retrace, so it should come to at least a bullish fair value gap. So we consider this bullish fair value gap here. So we don't just rush and consider a sell side liquidity resting here, because these fair value gaps here in the middle, this is internal liquidity. So we consider the bullish fair value gap first. So if it breaks below this, we can say, okay, that we will look at it drawing to the sell side. But for now, it's still in its internal range liquidity. So we still stay with that. So let me see how many people we have. All right, Bella, welcome. You're just coming in. So this is the 4 hours bullish fair value gap. Yeah, good evening, Bella. How far now? All right. So this is the 4 hours bullish fair value gap here. Let me set my text right. So Bella, have you been able to identify fair value gaps now?
Yes. Yes. Even last week, I identified this for 4 hours fair value gap. And if you look very closely, there's still another fair value gap before this one.
Yes,
Or
even
this
this
big one.
Yes, you're not wrong if you still consider this. It's still correct.
Them, but I've not tried buying them.
You have no words. You have no words.
I be one person they talk.
Okay. So if you picked this particular fair value gap here, you are not wrong. It's still correct, right? Even if you pick this, you're not wrong. You can consider, you see, we have two fair value gaps here just to, so you can consider both. But this way we had the reaction, so to keep our chart a little bit clean, so we just focus on this. But in a perfect world where we've not had this retracement yet, I will consider the two fair value gaps. So in the 2 hours time frame, I've shown the fair value gap, this bullish fair value gap, price disrespecting that, and a whole lot of this. So 30 minutes time frame. So just in the 30 minutes time frame here, we had this. Remember, this is the 2 hours inversion fair value gap. Hold on, let me take this. And this. So this is the 2 hours inversion fair value gap here. So if you really know about support and resistance, good luck. Do you know about support and resistance? Let me see.
Yes, I do.
If you know about support and resistance, the way support and resistance act, that's just how this fair value gaps act, right? So you want to see fair value gaps act as support or resistance. So they are really institutional support and resistance. That's why you see a lot of precision around them. So it just gets to it and drop, or it breaks through, it comes back and go the original direction. So in this case here, you see how this bullish fair value gap was disrespected. So you can anticipate price to retrace back to this inversion fair value gap and start going the to the downside. All right, so 15-minute time frame, just right here, we don't have a whole lot of fair value gaps, like bearish fair value gap here. So we can go to the 15 minutes time frame. So just in this 15 minutes time frame here, you see that there is no bullish fair value or bearish fair value gap. I mean, there is no bearish fair value gap here, right? But you have what? Buy side liquidity resting above here. This is buy side liquidity here. And also, before I forget this, so this is the 30 minutes fair value gap here. 30 minutes fair value gap. Don't forget, this is just right in the time that we want to trade. It happened, this 30-minute fair value gap. So you'll be looking at it to see the reaction, what you get at this point, this 30 minutes, if it is going to support price to break through this inversion fair value gap and the 1 hour bearish fair value gap. That's what you'll be looking at. So you also consider this 30-minute bullish fair value gap, right? But once you have this close below here, you can know that price is definitely going to the sell side liquidity. So this is a bullish fair value gap. This is what I'm trying to say in context. This is a bullish fair value gap. So you see that on a normal stance, you should have that price should just give this kind of expansion, touch the fair value gap and expand sharply to the upside. That's very normal, what we expect to see. But you see, in this case here, it broke through it. So in this case here is where it will find support, right? But now you see it has broken through it. So the way you want to see your support act, that's what you want to see. So as it broke through it, you want to see it retrace back to the 30-minute fair value gap and continue lower. But this is how to know a draw on liquidity. So example, you've seen this 30-minute fair value gap, bullish fair value gap broken and closed to the downside. You just know that it is going for a sell side liquidity. So your aim will just be looking for sell side, the closest sell side liquidity. And we have a sell side liquidity here. This is a swing low. That's a higher low. And we still have sell side liquidity resting here. And remember, from the higher time frame, we have a bullish fair value gap here. Also, there is a bullish fair value gap here from the 4 hours time frame, right? So we'll consider this sell side liquidity as a target. So, and you will trust it even more that this is going to a sell side liquidity once you have this candlestick close below and it has taken a buy side liquidity. Just like in this case here, you trust it that it's even going to go lower once it has taken a buy side liquidity, broken through a bullish fair value gap, and the candlestick closes below. So you can trust that it is going to go to the closest sell side liquidity. That's how to know draw on liquidities, right? And now for the specific model we are studying in the time window. This time window. So we come to our chat by 9 a.m. New York time. And we want to leave around 10. That's when you want to leave the chat by 10 a.m. New York time.
Exactly.
All right, and I kept it a bit 1 minute past 10. All right, so And now, this price action here at this point, yesterday, Friday, that was yesterday, right? On Friday was really, 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 should I say, how should I put it? It's really, really destructive for those that are inexperienced with this, right? Let me explain something. For a day, for days we have large range. During this time window here, we expect a little bit of sloppiness, right? We don't expect it to be as easy as other days. You've been seeing how easy it is other days. It will just drop seriously lower, right? Or go seriously higher. So on days after a large range day like Thursday, we can anticipate this type of move here, right? So we can anticipate this type of move here after a large range day on Thursday. So I don't want to go into the macros for now, because the macros after a large range day will have it up to 1010. We can trade up to 1010, right? We'll start from 950 to 1010, but let's not go there for now. That will be as we are still going further. Like, so we have this buy side liquidity here. Please, everybody should pay attention now. This really the model in handy right now. So we have just this buy side liquidity here. The model is once we have a buy side liquidity and it's in higher time frame PDRA, like the 1 hour fair value gap, the 2 hours fair value gap, and the probably 4 hours fair value gap or daily fair value gap. If it's a bearish fair value gap, we are looking for opportunities to sell. So now, in this case, now we have an inversion fair value gap, seeing that candlesticks from the higher time frame have broken through that, a bullish fair value gap that we were anticipating to act as support to price, breaking through that. So we expect that it should act as inversion to price, supporting price lower. We have this sell side liquidity resting just below here. So just once when price gets to this buy side liquidity here, right, and we have the higher time frame PDRA, we are very keen to observe what really happens at that point. You don't rush in. The reasons you don't jump in is that it has already taken a buy side liquidity. Assuming that you got in the buys here, it's okay, then you take profits right here. But once it gets to a buy side liquidity that has a higher time frame PDRA, there's always a potential reversal at that point, right? There's always a potential reversal there. So you see, at this point, this is the 930 opening bell candlestick here. The 930 opening bell candlestick. So you see the after the volatility have been pumped in. By now, you've started seeing how the volatility comes in from that 930, right? You've started seeing it now.
Yeah.
So once the volatility comes in, we expect a lot of speed. So you see how this traded so fast. We trace back to this is an inversion fair value gap, right? This is an inversion fair value gap at this point. I'm going to tell you what validates a shift in market structure and how to work with it. So this is an inversion fair value gap here because we're looking at it as a bearish fair value gap, but now we've traded outside of it and closed higher than an inversion fair value gap. So we've taken this buy side now, this buy side liquidity here. So we want to see this kind of pattern at this point. Let me show you. We want to see something like this. Let's assume the chart was here, right? We want to see this here. We've taken a buy side. Then we want to see willingness for it to go to the downside. Then this becomes the shift in market structure. This, the willingness for it to go to the downside here. So this is what we want to see. This is what we want to see do. But in this case here, it was a little bit sloppy here, and it almost exhausted the time window before starting to go lower. But there are some stuff I want you to really observe from if price wants to go up or if price wants to go down. There are some characteristics that repeats over time with this. So once you have it take this buy side liquidity here, you see how it dropped seriously. This candle here, this is a bullish candlestick here, dropping seriously. But before this, you see that we did not have any shift in market structure. That's why I like it when Good News said that the price was not clear, right? Like I really understood what he was saying from there.
I did not see it sweep. I did not see that break of structure.
Structure, yes, that was just it. But we had this sweep to the buy side liquidity here, but there was no obvious break of structure to the downside. So
right.
Where's the phone?
So now you see when it traded to this point here, this way it took out the low. This is the point it took out the low. So we can consider this because this point here, this and other block at this black candlestick here, we can just look at that. So originally, this would have been a bullish order block, but since it has broken through that, it becomes a breaker. So let me know. So this is a breaker. Let me just write it.
That's another thing I really need to understand. Breaker, order block, mitigation block. They are very confusing. I don't really understand.
I'll explain as we go. It's with time, right? So why this is a breaker is that this is an order block, right? This is a bullish order block. If price came to it
And
continue higher. But now what happened is that price at this point here closed higher. Originally would have come back here.
Why you charge my phone be owning this thing?
Please mute your mic. Mute your mic, please. So we have this here. Let me go back again to explanation. So we have this here. See coming down here, taking out this high. So originally should have just come back to this other block and continue higher. But see what happened. It broke through this. So once we have a higher high, let's say a low, then this high here is higher than this previous high. This candlestick here becomes the breaker. So that's not really compulsory that you know that, but for now we're just having a preview and review of what happened. So now you see how it traded to this point, and from here is macros, which I don't want to talk about. So we traded up to these lows are relatively equal at this point here. So we traded up to the sell side liquidity.
Bring that light.
The gist is, please can you mute your mic?
Ma.
Thank you. So the gist is, once you see price,
Hide my phone.
so a lot of
because you want to watch TV.
Oh God, let me mute.
You have need there.
This is what's happening.
Hold on, I'm coming. I was trying to. All right, can you see my screen now? I think it should be better now.
Okay, so
So once you have,
it's
okay, it was, I was trying to mute someone from the noise, right? So I mistakenly off my screen. So we have this here, this breaker here. Yeah, so we've seen that just this candlestick going below this low. So we know that it is going lower now. But now where is it going lower to? A sell side liquidity. So you see how it traded to the sell side liquidity. So let me take this stuff out so you can see. So you see the candlestick close below just after taking a buy side liquidity. Then you can trust that it is going for the sell side liquidity resting here, right? And
I had known this, I would have gotten a position.
So that's why we learn every day, right? But just that once you see that a high has been taken, and it is rejecting of that high, and it is showing you willingness for it to trade, down, you look for the drawn liquidity, which is going to be a sell side liquidity in this case. So that was how you'll be looking for a target. So you need a device for entry. So devices we use for entry are still fair value gap and other blocks and the rest. But for now, I want you to focus more on fair value gaps than this. So yes, there's something I want to show you, though that is not really the trading model in our time window, right? So this here, you notice how this point here, this is a swing here. This is a swing here. This is a swing here. So came down. Let me show you that. Good luck. Can you identify that this is a swing, like this point here? Then before I start showing, like,
is it me or good luck?
No, not you, not goodness.
I wouldn't have.
Okay.
Okay, so I wouldn't have. I would have mistaken it for either the lower one or the upper one.
Okay,
I wouldn't have seen it.
This is also a swing here. Why this is a swing is that, see, the price was going higher, it came down, we keep it like this. So now, if we draw it like this, can you now see that that's a swing? If following the candlestick behavior. So if we go to the lower time frame, this is what we'll be seeing in the lower time frame, like this kind of market structure, just at this point. So this becomes a swing. So now, at this point, you're seeing that price is giving you willingness to go down here, just here. We are not blind to that. We are seeing that it's giving us a lot of willingness to go down here. It even used this bearish fair value gap here to go down. This is a bearish fair value gap just here. You can get down. So once it came to this bearish fair value gap, you should be considering a sell side liquidity. This is not the model, right? This is not this outside a trading model. The model for execution is after the 9:30 opening bell. So just after it traded to this bearish fair value gap, it traded to the drawn liquidity, this sell side liquidity. What you should be also considering is that, number one, there is a 30-minute bullish fair value gap. So there's always a potential reversal just after it takes a sell side liquidity just inside a bullish fair value gap, right? So this is a 30 minutes bullish fair value gap here I'm talking about. Let's just go back. So this is a 30 minutes bullish fair value gap. Can you see that at this point? This is a 30-minute bullish fair value gap. So once price starts rejecting, hold on, let me show you. So once you see that now price has taken a sell side liquidity, now entering a sell is very risky because just after price takes a sell side liquidity, there's always a potential reversal. So you see here, just after it took out this sell side liquidity, it created a bearish fair value gap. Right? It created a bearish fair value gap. So a lot of people will be looking for those that trade with this fair value gap concept will be looking for a short opportunity to sell to probably this sell side here because this sell side looks relatively equal. After all, price has given willingness to trade to the downside. But because it have taken this sell side, there is always going to be a potential reversal. So you see how after it took this sell side, there was a reversal right here. And the candlestick started closing above it. So if you even extend the fair value gap, the bearish fair value gap, you see that At this point, it came back to a fair value gap and continue higher. Just yes.
That Friday there was a price. This whole price action was inside the 4-hour FVG. Bullish.
No, this particular one, no.
Check.
Okay.
Check that. Let's put 4-hour. I thought I was actually expecting price to go higher. So it was like violating.
Okay, this particular one.
Yes.
Okay, let's mark it. So let's now force start.
Yes, that one.
Okay. So you see where it is. Have you seen where the fair value gap is? Yes.
Okay.
Yeah. So just here now, after taking the sell side liquidity, you see how it broke above it. So just breaking above this bearish fair value gap, that validates a shift in market structure. This is a swing high here. Have you seen this is a swing high here? Broke close above. So took buy side, then reverse. Another thing you should also notice is how the body of the candlestick will stay below the buy side that have been triggered. That's what I really wanted you to see. And that's why when you pointed that 4 hours fair value gap, I said you should look the 15 minutes time frame. You still notice the same characteristic, right? See,
yes.
Once it reaches it has taken off a sell side liquidity, you start seeing the body of the candlestick stay above that. Right? You start seeing the body of the candlestick stay above that. So that's just a characteristic and showing you that this way I'm willing to go this particular time. So for now, this is just it for the review. And that's it. Should we do a WhatsApp call for let's just have a WhatsApp call for question and answer because I want to be working out now of the chat. Okay, so let me calling.
I wanted to ask, there is this place I entered. So I want to ask if it's actually good. After that sweep, I entered the position. No. Not in that window. Just after that latest sweep down.
Here.
Down. Yes.
Okay.
I bought at the fair value gap. Can you go to 15 minutes?
Okay.
15 minutes. Yeah, that fair value gap there.
This particular one.
Yes.
Okay, it's still okay. That's just the thing. Whatever I'm teaching from the lower time frame is applicable to the higher time frame too. So it's still okay. If you want, you can build if you really understand it, you can build a model, a long-term model, how you want to trade with this same stuff. Right?
Okay.
Yeah.